Hello there. Thank you for joining our webinar. My name is Jamal Khan. I'm a senior tax partner, and I've got my colleague Alan Mill here. Alan is a senior tax manager, and he's a chartered tax advisor. He's a chartered accountant with over 30 years of experience. Today's topic is stamp duty, land tax, refunds. Now, there has been quite a lot of in the press. There has been some new cases. There's been some case law with against HMRC at the tax tribunals, where the concept of whether stamp duty refunds are due or not has been tested. The taxpayers have won some of the cases that we're aware of, and which has resulted in a lot of claims being made for to refund overpaid stamp duty, land tax. There are other cases as well, for example, where you've got multiple dwellings relief, or if you've sold one of where you made residence within 3 years. Alan will be covering all of these. It's a very important, I think it's a very hot topic at the moment, as HMRC are giving the refunds depending on the circumstances, but there are some criteria to be satisfied, which Alan will be covering in detail. Over to you, Alan.
Yes, good afternoon, everybody. Thanks for joining us. As Jamal says, it's a very hot topic at the moment, and quite a lot of it comment on out there in the professional press. So let's jump in. Yes, there's a few brief words there about Churchill Tax Group. If you're not familiar with us, we're a national specialist tax advisory firm covering all of these areas listed there, and happy to help you in any of those situations. The agenda: brief history of SDLT, how it works, looking at how the legislation deals with residential and commercial properties. Quick word about the SDLT COVID holiday, and then something about the various surcharges, additional home surcharges purchased by companies, non-resident surcharge. Then the good news, the potential for multiple dwellings relief and derelict and uninhabitable claims, and then a few words about the claim process, and then just a closing summary. So here we go. Yes, stamp duty land tax was introduced in the Finance Act 2003, and it replaced stamp duty, which is still applicable for share transactions. Various reliefs have been introduced and surcharges over the years: multiple dwellings relief, additional home surcharge, non-resident surcharge. In 2017, the system changed. Initially, it was charged on a sort of slab basis, so you pay the same rate on the whole amount of the consideration. It's now done on a slice basis, a bit like other taxes, so it's progressive depending on the amount, different slices depending on the amount of the consideration. In April 2015, SDLT was replaced by LBTT in Scotland, and similarly in Wales in April 2018, it was replaced by LTT. SDLT is still payable on land transactions in England, in England and Northern Ireland, I would just say that although the Scottish and Welsh variants of the tax are similar, there are differences. So don't assume that what goes for SDLT is applicable to the Scottish and Welsh taxes. Do take advice on that point, and we're happy to assist. Yes, quick word about how it works. It's, as I said, it's charged on the land transactions in England and Northern Ireland. There are reliefs and exemptions, and the tax is levied by reference to the purchase consideration on the basis of bands, 0 being the lowest and 15% being the highest in some circumstances. It's the solicitor or the conveyancer who submits the forms, but there are often situations where they are not particularly familiar with the nuances of the tax, and it's a good idea to get advice from a tax advisor such as ourselves, and as I say, we're obviously very happy to help in those circumstances. Residential versus commercial. Commercial property attacks lower rates of SDLT than residential. For commercial property, it starts with a purchase consideration exceeds 150,000 and is charged at 2% and 5%. And commercial property includes shops, offices, factories, agricultural land, properties that aren't suitably lived in, and 6 or more residential properties in a single transaction. Where property is mixed, that's property that is both residential and commercial elements. It is treated as commercial for SDLT purposes. Yes. There was a COVID holiday introduced by the government last year during the pandemic to keep the housing market moving. The result was that there was no SDLT charged on residential properties bought for less than 500,000 in the period between 8th of July 2020 and 30th of June 2021. For the period that's now just started, 1st of July to 3rd September 2021, that holiday is not quite as generous. It's charged on properties bought for less than 250,000, and thereafter normal rates apply. And it's worth noting that the holiday didn't apply to commercial properties. Additional property surcharge, you may be familiar with this. Buyers of second properties have to pay an extra 3% SDLT on the entire purchase price for purchases over 40,000, and this applies if you've got another property wherever in the world it is. The current threshold for the surcharge is 250,000, but this reduces to 125,000 with effect from 1st of October this year. And the extra 3% can be refundable where stamp duty. Whether when the second property replaces the main residence and the first property is sold within 36 months. This is quite a popular area for relief, and we can help you in obtaining a refund if you qualify. Another area for surcharge is purchased by companies. SDLT is charged at 15% on residential properties costing more than 500,000, bought by certain corporate bodies or non-natural persons, as they're referred to. And in these circumstances, there's also possibility of a charge under the ATED regime, which is a separate topic, but worth noting at this point. 15% does not apply to property bought by a company that is acting as a trustee of a settlement, or bought by a company to be used for a property rental business, property developers and traders, property made available to the public, or financial institutions acquiring property in the course of lending. Non-resident surcharge. From 1st of April 2021, a surcharge of 2% applies to non-residents buying properties in England and Northern Ireland. For individuals, there's a specific test in relation to the transaction to determine whether the surcharge will apply. So exactly on all fours with the statutory residence test, there are differences in the definition of non-resident. Any buyer buying individually or with another person is non-UK resident in relation to the transaction if they are not present in the UK for at least 183 days during the 12 months before the purchase. And the surcharge can also be charged in addition to other surcharges, i.e. the company surcharge. So it can mean that SDLT does really start to add up. Now on to the more positive aspects. Multiple dwellings relief. Multiple dwellings relief is available for purchases of more than one dwelling where a transaction or number of linked transactions include freehold or leasehold interests in more than one dwelling. To calculate the SDLT payable under MDR, it's necessary to divide the total amount paid for the properties by the number of dwellings, work out the tax due on this figure, and multiply this amount of tax by the number of dwellings. And that should bring a lower result than it be absent the relief. And it's important to emphasise that HMRC do believe that this relief has been abused, and they have successfully challenged a number of cases where taxpayers have applied for the surcharge to be implemented retrospectively after they already paid the tax. HMRC believe that where properties are not genuinely separate on the effective date of transactions, that is not a situation where MDR is applicable. And as I say, there have been a number of cases. I mean, the example that comes to mind is a granny annex, where there may be some separate accommodation, but there is not genuine separateness of accommodation, such that the occupants of the two sections are living completely independently. I mean, there are situations where utilities are controlled in the main residence, or council tax is paid as a single figure on the whole residence, and in these situations, HMRC will challenge any claim for the surcharge. And as I say, there have been situations where this challenge has been successful. So it's important to be careful before a claim is made. Derelict and uninhabitable claims, where property is derelict and uninhabitable at the effective date of the transaction, it may be possible to reclaim 3% additional property surcharge. There was a recent case, an early case, where a taxpayer won in the tribunal. HMRC disputed that the property was derelict and uninhabitable, but the taxpayer won, and this has opened the door to claim, to more claims of this sort than had previously been made. It's important to note that to be eligible, a property needs to be in need of substantial rebuilding as at the time it was purchased. It's not just enough to say it needs refurbishing, it needs a new kitchen, new bathroom. It's really got to be a situation where nobody would want to live in that property at the time it was purchased. So it is completely derelict. So again, you have to be careful before submitting claims to ensure that you do fulfill that criteria. And this is where we can help. We can examine the facts of your purchase. We will ask you for relevant documentation, evidence of what the state of the property was at the time you purchased it, and what you had to do after it was purchased in order to get it back into an inhabitable condition. And we will tell you if in our view that is sufficient to make a claim. And there's no point in going ahead with a claim where there's no chance of winning. So we will assist you by reaching a conclusion on that and giving you the assurance that you've got a valid claim. Yes, just a word about the refund. The refund process. Refunds can be claimed where property was derelict and uninhabitable on purchase, where the surcharge has been paid on the second property and the first property was subsequently sold, or where multiple dwellings relief has incorrectly not been claimed. And we can handle the process for you from start to finish. What you need to do, you need to authorise us as your agent to provide us with the SDLT5 certificate. That's an important document for HMRC to process the claim. And we need all the evidence that you are able to provide in terms of the state of the property when it was purchased. I mean, photographs are often quite useful to have to see how far advanced the dereliction of the property was when you purchased it, and also invoices from builders who may have done work on the property after you bought it. And we will then submit the claim on your behalf. We will manage the whole process with HMRC. We don't just do the process, do the submission and then leave it at that. We will handle any issues that arise. We'll talk to HMRC on your behalf, ensure that your interests are properly represented, and that if you've got a legitimate claim, that is processed and paid. And then once we receive the refund, we'll take our fee and pay the balance back to you. So we do aim to make it as easy and as stress-free as possible. So yes, so just a few words of summary. SDLT is chargeable on most land transactions in England and Northern Ireland. It's an increasingly complex tax chargeable under the slice system with numerous relief and exemptions, and also surcharges depending on the type of property, the identity, legal form and location of the purchaser. Payment of SDLT is dealt with by solicitors and licensed conveyancers during the conveyancing process. But as they're often not familiar with the nuances of the tax, it's often a good idea to take advice from a tax advisor, such as ourselves, in any cases of doubt. Refunds can be obtained when property is derelict and uninhabitable on purchase, where the surcharge has been paid on a second property and the first property has been sold, or where MDR has not been claimed and that was not correct. If you believe you have grounds for claim, Churchill Tax advisors can review the evidence, confirm that the claim has merit, and submit the claim on your behalf. And we are, as always, very happy to answer any questions. And that concludes my presentation, and thank you for listening.
Thank you, Alan. You can stop sharing the screen now. Right, thank you. That's very useful. I've got a couple of questions here, and we'll just see if we can choose the most important ones. I mean, I know you've covered this already, but have HMRC indicated that they will challenge these refund claims, what's the likelihood that they will do so, and what should the taxpayers who are claiming these refunds, what precautions should they take?
Well, yes, I mean there are situations where HMRC raise a challenge. Sometimes that's before the refund is paid, or it can be in a review process afterwards. So, I mean, the best advice that we can give is to make sure that the claim has legs, that it's valid and it's not spurious. And as I mentioned, we would wish to see all the relevant evidence as to the circumstances of the claim, so we can make an assessment of that, and we can be quite frank with you and say, yes, you've got a claim, or if you haven't, we can say no, this isn't worth pursuing. So yeah, evidence is everything, really. I think I would say that'd be my main point I'd emphasise.
And if HMRC do challenge, what will the process be in terms of if they're looking, if the claim was wrongly made, do they have to pay back the tax? Is there any penalties?
Well, but yes, potentially for incorrect claims that there can be penalties. So it's really just a case of emphasising the point that the claim should not be commenced if there's any challenge, any risk of the claim being disallowed. I mean, there are situations where there's genuine disagreement. I mean, as in all tax issues, there are situations that arise where the views of HMRC and the views of the advisor are different, and it's possible to take these claims to the tribunal as it is with any other tax issue. So there is a tribunal process that can be followed, but it is obviously preferable not to get to that stage.
Excellent. Okay. And would you encourage, finally, would you encourage the landlords or our viewers to at least just test if they are eligible or not? Speak to us. See if there's any scope to get a refund. At least we could put the clear picture to them.
Yes, absolutely. I mean, if you're sort of looking back to the circumstances of your purchase and you feel that SDLT wasn't properly applied, I mean, as I mentioned, it's often the case that solicitors and conveyancers are, I mean, they're experts in processing, the conveyancing, but they may not be fully appraised of the nuances of the tax. So it's certainly worth considering that. Look back at the case, reflect on what the circumstances were, what may have come to light subsequently about the property, and if you feel that there's any chance at all, then please do contact us, and we can look at it and assess it for you, and tell you if there's a chance for claim. and
Right.
obviously process it if we go ahead.
Great. Well, thank you, Alan. Thank you. That's very useful. And for the rest of the viewers, if you've got any questions, do get in contact with us. You've got our contact details. Yeah, until next time, hope it all goes well. Thank you.